Hello traders, Doc here. In this video I will talk about reversals. I will show you how to spot them and how to trade them. At the end of this video I will show an example of a reversal trade that we took in a VIP group and we gained plus 55 pips in profit. We have two types of reversals, bullish and bearish. This is an example of a bullish reversal and we can see a downtrend here, lower highs and lower lows, so bears are in the control, but then bulls take the control and push the price up, so price reversed and went up. In a bearish example we have uptrend first, we have higher highs and higher lows, then bears take the control and push the price down. First, let's see some examples of a bullish reversal. So first thing that we can see here is a downtrend. We can see lower highs and lower low structure. But then as you can see, price formed a support zone. So basically it failed to go down and form a new lower low. That is a first indication of a reversal, but of course it doesn't mean that price will reverse. It's just a first indication and we should look for another reasons. We should wait for a price to give us more reasons and give us signs that it is about to reverse. Second sign that we have here is a breakout. So price broke this bearish trend line. So now we have a support zone creation and we have a breakout. In this point you can be very aggressive and look to buy, but I don't like to do that. I like to wait for a retests and additional confirmations with the bullish or bearish candlestick patterns. This time price broke this bearish trend line and went back to retest it. It also retested its previous lower high, which is a very good sign because now we have this support here, we have breakout, we have retest of this trend line and also this previous lower high. And then as you can see, this bullish pressure occurred here. Price formed this massive bullish candlestick and reversed and went up. Basically, we can say that price formed this double bottom chart pattern here and continued to go up. So price retested this trend line and previous lower high with a double bottom chart pattern, which is another reason to look to buy. In this case, you want to enter after this bullish pressure here or maybe after this massive bullish candlestick and place your stop loss below this trend line and also below these previous lows. So at this example here, we have multiple reasons to believe that price will reverse. As you can see, we were very patient and we waited for multiple signs. And as you can see, price went up. This is another example of a bullish reversal. As you can see, we also have this strong downtrend. We have lower highs and lower lows. And these lower highs we connected with a bearish trend line. This time, price didn't form support zone or a higher low, but it formed this massive bullish pressure and broke our trend line. Price then formed this higher high here and went down to retest this previous high. We can also call this zone a significant zone because here it acted as a support, but here it acted as a resistance once and then again here. So significant zone is a zone that acted both as a support and resistance, or as a resistance and then support. After this higher high formation, price went down to retest this significant zone and also this previous lower high. We can see these multiple bullish wick rejections followed with this massive bullish candle. This gave us a final sign that price will reverse, and as you can see, it went up. So in order to, let's say, predict reversals, you need to analyze key levels, key zones and trend lines, and also to spot the breakouts and retests. This is a perfect example of a reversal where price broke a trend line and then retested previous high. Then bullish pressure occurred and price went up. This is another example, but this time, as you can see, we have this higher low formation. So we have strong downtrend, price then formed a pullback and then formed this key level here. It continued to go down, but as you can see, it formed this higher low this time. So that is the first indication of a potential bullish reversal. Price then broke this bearish trend line, which is another indication. Then we can see this massive bullish move that broke this previous key level. At this point, you can be aggressive and look to buy, but I do not recommend that. I always like to wait for a retests and confirmations, and then I look to enter. As you can see, this time price went down to retest this previous key level and form this bullish candlestick pattern. Also, we can see these weak rejections and then we can see this strong bullish candle here. I would consider this as a final sign and confirmation of a reversal. So to simplify this, we have this higher low formation, we have breakout, we have a higher high formation, and we have a retest of this previous high and basically a new higher low formation. As you can see here, we have this low, we have higher low, we have a breakout, and we have another higher low that is also retest of this previous key level. And after strong bullish pressure here, you can look to buy. Now let's see example of a bearish reversal. This time we have uptrend and we have higher highs and higher lows. And as you can see, we have this significant zone here. It acted as a resistance here, but then it acted as a support here, here and here. Price continued to go up, form another higher low and then went up but failed to break this previous higher high. So this is the first indication of a reversal, and of course I would not recommend you to sell just because of this one sign here. We need to wait for more signs and more confirmations. Price then broke this bullish trend line, but it broke it with this massive bearish candlestick pattern. So you can be aggressive trader and enter here, put a stop loss above these previous highs, but I don't like to take aggressive trades As I said before, I always like to wait for pullbacks and retests. We can see that price continued to go down and then it formed this pullback and retested this previous significant zone. Now this is a place where I would look to sell and put a stop loss above this previous high and possibly aim for this previous major low or even below this low if there are some major key zones there. I would call this entry patient entry because we waited for price to break this significant zone and to retest it. As you can see, that retest didn't occur here. Price didn't retest this previous lower high or this trend line, but it went down and it retested the significant zone. Also, good entry would be to wait for a price to retest this previous higher low or to wait for a price to retest this trend line and form a new lower high. So all these trades would be very reasonable. Here we have retest of a previous lower high, here we have a retest of a trend line, a new lower high formation, and here we have a retest of a significant zone. So after a breakouts, I advise you to wait for a pullback and retest of a previous key levels, or you can wait for a price to form a new key levels. For example, price can go down and form a double top chart pattern, or to form new minor resistance zone, anything that would give us a good reason to sell. And that is what happened here on this example. We can see higher highs and higher lows. Price broke our trend line with this massive bearish candlestick, and of course I would not enter here. I would definitely wait for a pullback or a retest. As you can see, a retest occurred, price went up to retest this previous trend line, but also we have head and shoulders chart pattern. First we have this shoulder here, then price formed this head that retested our trend line, then it formed another shoulder. So this time we have a retest of our trend line and also head and shoulders formation. Price then broke this neckline, or we can say a new lower low, and then continued to go down with this massive bearish move. So this time we had a chart pattern formation after a breakout, and that pattern also retested our trend line. You can also add some indicators. In this example I use stochastic RSI. We have this higher highs formation. Price then formed this lower high, which is the first sign of a reversal. Then it broke our previous lower high and formed a new lower low. Then we can see a pullback and retest of this previous higher low, and price formed this massive bearish engulfing candlestick pattern. And also we can see high showings of our stochastic RSI indicator. So this was a very good place to sell and put stop loss above this previous key level. So this time we have a lower high formation, we have a breakout of a previous higher low, we have a new lower low formation, we have a retest of a previous higher low with a bearish engulfing candlestick pattern, and also sell signal of our indicator. So all these signs here give us a good reason to sell here. This is an example of very aggressive reversal. As you can see here, price broke our bearish trend line and formed this massive move up. You can definitely enter here and you can look for these aggressive trades, but as I said before, I do not recommend you to do that, because here we have basically one reason to buy, and I always recommend to look for multiple reasons to enter a trade. It can work sometimes, but in a forex market we look for consistency, and it is very hard to find consistency if you look just for one reason to enter a trade. Every time you enter a trade you look for multiple reasons to buy or sell, and it's much more likely that you will have consistency with your profitable trades. At this example here I would recommend you to buy here. The reason why is because price formed this massive bullish move, and then as you can see it retested this previous key level here. This was another lower high formation, and we can see these massive bearish wick rejections. Price broke it and formed this bearish move and retested this key level. On this example here we have downtrend, then price consolidated between this support zone and this previous key level. Price then formed this massive bullish candlestick and then continued to go up. Price didn't form a pullback and didn't retest this previous key level, so I would likely miss this trade and possibly look to buy somewhere here but on a lower time frame. But this time here we can see same situation, but price went down to retest this previous key zone. And I would definitely look to buy here after this bullish engulfing candlestick formation, or somewhere here, and put a stop loss below this previous zone. Basically we have the same situation here and here, but this time we have a retest and much safer trade than this one here. So this is US dollar Swiss franc trade that we took a few days ago. I applied same knowledge where I looked for key zones, key levels and signs of a reversal. Here we can see this support zone and we have higher highs and higher lows that we can connect with this bullish trend line. Price then formed this lower high formation here, and then it went down to break our trend line. So this is a second sign of a potential reversal. So price then went down to form a new lower low formation, and now we have more signs that tell us that a reversal is about to occur. As I said before, I always wait for a pullbacks, and that is exactly what I did here. Price formed this bullish move and then formed this new lower high formation. So how did I know that this is a new lower high formation? First I used the help of a volume profile indicator. I spotted this high volume profile area here, So this is the first reason. Second reason is this level here, where we can see that price formed this massive bullish candle, but then immediately bears took the control and pushed the price down. So price then went back to test this level. But more importantly, we have high showings of this stochastic RSI indicator. So I noticed all these signs that indicate reversal, and also I saw this indicator sell signal here. So I didn't want to hesitate and I entered after this bearish candlestick here. As you can see, price formed this bearish candlestick, then bulls tried to push price up, but then we have this weak rejection, another one, because first it happened here. So I decided to sell and to put my stop loss above this previous high, and I aimed for this key zone here, below this previous lower low, because I expect a reversal and I expect a new lower low formation, and that is exactly what happened here. Price formed this new lower low and then went up to test this previous key level. As you can see, I have another trade running here. I decided to enter here after this massive bearish engulfing candlestick pattern, and basically also after this another lower high formation. If you look here, you can see that the indicator is also giving us a reason to sell. So I decided to enter here, put stop loss above this zone, but this time I decided to aim for this lower low here. I don't know if price will go down and reach my take profit, but anyway I moved my stop loss, so I protected this trade, and even if it goes up we will not lose, because I protected this trade when I moved stop loss to my entry level. Maybe I will close this trade soon, because we can see these solid profits here. Basically you need to look for multiple signs in order to find a reversal. You need to look for breakouts, key level and key zones violations, and I recommend you to look for retests. If this video was helpful to you, please like and subscribe so I can continue to make more. Thank you very much and see you in the next video. Bye bye.